Good evening, everyone, or good afternoon, wherever you are. Today is February the 6th, Thursday, the day before the jobs numbers come out. And that could move the markets. The market has really just been kind of going a little bit up lately. It hasn't broken out above the highs, but it is improving. So it's kind of looking bullish, but kind of treading water too. So we're just waiting for that jobs number to come out tomorrow at 8:30 a.m. And that probably is going to have an impact. Although I don't think it's going to be a big surprise. So might actually help the market to move higher and take out those highs. We'll see. So let's take a look at where we are. First, let me turn on my cursor. So as always, I'm not a financial advisor. This is for educational purposes only. You have to understand your own risk profile and make your own decisions. Nothing that I say here is recommending anything to buy or sell. Let's look at the home page first and look at the market bias. And you can see it's ticked up today slightly, and it's definitely on an uptrend. So it's moved a little higher. The S&P right here, again, has not yet taken out the highs, but it's getting closer, keeps moving up. The NASDAQ has a little bit more work to do, but it's moving up too, but it's got a little more to go. And Bitcoin actually, I think, went down today. Started to come back actually, but it did go down. We'll look at that in a closer view here in a second. Go to the market bias matrix. And you can see a lot of green signals today, a couple of red ones, but mostly green and mostly in the medium term column. So that's actually a good bullish sign. Notice banks down here just got a medium term up signal. So this is the banks, the bank ETF, if you like to play banks. So there's the medium term up signal right there. Got a short term up signal way back here, and it has just continued to go higher. So banks are looking good. Regional banks, same thing. Got the short term signal back here and just got a medium term signal today. So they are continuing to move higher. Let's take a look at Bitcoin before I look at a couple of other things that people asked about. So Bitcoin, you can see right there, actually it did go down today. Not sure what it's doing after hours, but definitely a bearish candle. It's below all of its moving averages. It tried to make a comeback during the day, but failed, came all the way back to the open. So that implies potentially more downside tomorrow. Let me draw in the channel right here for Bitcoin, and it should stay here once I draw it in. So we got an upper channel right up here at about 106. We've got a lower channel right about there at about 92,000. And we are just moving in and up and down inside that channel. Looks very much like the distribution phase that I showed you previously. So right now it looks like it's headed to the bottom of the channel, then probably will bounce back to the top. We'll see, but certainly continue to go lower even as the markets continue to go higher. So Bitcoin is diverging from its correlation with the rest of the market. Let's take a look also, first the 10-year yield. I had drawn this in before. I said there's a potential head and shoulders, needed to break this support line, which it has. So it is down here right now. It's broken the second support line as well. Likely going down to 4.25. So it looks like the 10-year is going to continue to decline and go down. We'll see. But the target right now is about 4.25 for the 10-year. Bonds didn't do much today. Is actually a spinning top candle today. But that could be a continuation pattern as well. So it just took a pause, had a nice up day yesterday, and then took a pause. Needs to get above the 200-day moving average, and more importantly, needs to get above, it is pretty much is right at it. Depends on where you draw it, but it could already be above it. So it might be breaking out right now. I'd probably draw it to the close right there. So it's actually above the line. So that's positive for bonds. Bonds might be ready to rally higher. I'll leave that on there too. We'll take a look at that as we go along. Let's see. Somebody asked me about gasoline and oil. Gasoline has been going higher. You can see right there. So big, huge gap up, and it's holding the gap. It's pulled back a little bit, but it's really holding in there. So gasoline continues to go higher. Oil going lower, the opposite. So this is the USO. This is the United States Oil Fund sitting right at the 200-day moving average. So it actually is going lower. We can look at WTI crude, and it's doing the same thing. So it's definitely going lower as well. It's interesting. Gasoline is going the opposite direction of crude oil right now. Let's take a look at lumber because there's been a lot of talk with tariffs and everything. You can see right here when the talk was about putting tariffs on Canada, which we get a lot of our lumber from Canada. And then after that eased, it had a big downtrend. It looked like it perked back up a little bit today, but it's by no means is it in accelerated screaming higher territory at all. In fact, if we go back, let's go back 5 years. Lumber was way up here. So you can see right here, this is the pandemic right there. And then we came out of the pandemic and price of lumber skyrocketed, as did everything. And then it pulled back. And then in 22, it skyrocketed again just before the Fed started raising rates. And then lumber came down and has just basically been moving sideways right now in this channel down here. So we could draw a channel for lumber right about here. Probably a little bit lower, right about there. And there's a bottom channel right about there. So that's what it looks like. So lumber right now is not in dangerous territory by any means, I don't think. We'll take the 5 years off and see what it looks like. And there's what it looks like right now. So there's the channel that it's been in for about 3 years now. And it's actually in a little higher channel. It's in the upper half of that wider channel right now. The breakdown would come when it breaks below that right there. So there's the trend line for it to break down and go lower. So right now it's kind of in a upward triangle. So it needs to break out of this level up here before it's really in dangerous territory. All right, that's lumber. What else? What else did people ask me about? Oh, UNG, natural gas. Natural gas is also trying to break out, just like gasoline. It's now above all of its moving averages, actually, and it just got a short-term up signal as well. It's had a medium-term up signal for quite a while and a long-term up signal for quite a while. So it actually looks pretty good. I'll go back 3 years on this. You can see how far down it's come. And it's also in kind of the same kind of channel right now. It has an upper range up here, somewhere around right in that area. Lower range is right down about there, around 14, let's call it. And then there's another one right there, around 20. So that's basically where the channels are for natural gas. You can see it now down here. And if we take the 3 years off and go back to 7 months, and that's what it looks like. So that's the channel that it's in, and it looks like it's heading back up to the top of that channel. So that's natural gas. All right, let me now close some of these down. And I want a couple of things that folks have asked me about. First, I'm going to take a look at the market, just see how the market's doing, look at the dashboard, look at some of those things. And then I'm going to get into some of the questions. So the dashboard is here. Equities, you can see, pulled back. The Dow pulled back, but the S&P actually was stronger, especially at the end of the day. The NASDAQ 100, same thing, stronger at the end of the day, and the VIX went down. So all of that is bullish. Sector summary over here, we've got financial, staples, industrials at the top, communication services, and discretionary. Discretionary probably will head down tomorrow. and I'll show you why in a minute. And then technology down here. So those are the aggressive ones are kind of in the middle of the pack. And for industry groups, tobacco, interestingly, is the number one. And then XLY is discretionary. So one, two, three, four discretionaries in the top 10. Renewable energy is in the top 10 as well. Let's take a look at NXT, which is in renewable energy. It's in that industry group. We've looked at this before. NXT had a great run. It's pulled back, sitting kind of hovering right above the gap. So the gap support is at 46.50. So it could hover there and start going higher from that level, or it could come down here to the 21, which is at about 44.50. So we'll have to watch that and see what happens, but it could actually not even go through that gap support right there. That's the upper gap support. So we'll see what happens. So back to the dashboard. That's the industry groups. And interestingly, this one here, GRR, this is the number one stock out of our top 10 list today. Let's take a look at it. It's a software company and looks like it's heading higher. So that's a pretty positive view. Just got a short-term up signal, and the ADX has just turned positive, and the accumulation, everything actually is just turning up on this. So this looks like an interesting one. It's definitely forming a cup. It might go up here and make a handle up around 24. Right now it's at 18, so it basically could go another 40% higher from 18 to 24. So interesting that that one was on there. That's been on the top 10 list. Also Tapestry, I think Tapestry might have reported today. Yes, Tapestry reported. So that's a black candle. Remember what I said about black candles? Watch them the next day. Looks like they had good earnings. The next day, it might pull back a little bit more before all of the people that wanted to take profits are done. Usually that only takes about 2 or 3 days at the most. As long as it doesn't fill this gap down here, and then once it starts to move higher after the selling, then that usually is a good time to get in on Tapestry. So that one looks pretty interesting as well. Palantir is up here. ACMR. This is semiconductors. That one had a good day today as well. It reports tomorrow. No, it's last earnings. It reports on the 26th. So it's starting to move higher as well. So it looks like all of the semiconductors are starting to recover and looking pretty good. Let's look at the end of the list. Fubo over here, Roblox. Roblox might have reported today as well. Let's take a look at that. Yep, they reported today and looks like they didn't have great numbers. So sold off and then recovered all the way back to the 21. Opened below the 50, recovered all the way back to the 21. So that might have been one. I don't know what the earnings look like, but if the earnings were decent and it sold off like that, that might be a good time, would have been a good time to get in right down here at the 50-day. So what else do we have? Let's go back one more. Anything of interest? There's quantum computing stock right there. CLS. This has been a AI stock, WGS, which gained 2,600% last year, but looks like it's now heading lower. So let's look at this on a longer view. So yeah, it's definitely broken. So there's a distribution phase that I told you about before. There's the markup phase, there's the distribution phase, and now it looks like it's broken down. There's the gap support right there. Looks like it's about to break that, so it may be heading much lower. It might be a one to short. We're going to talk about shorting here in a second. That was one of the questions that I had on my list. All right, so that's the market for today. I had a question about the momentum chart and where to find it. So if you go to the website, this is for subscribers, and you click on the charts page right here and go down here right to the top. It says index charts right up here. This little button right here, and I just updated this today. that will show you that monthly momentum chart. So if you remember, I showed you the period just before the 2022 bear market, and we had 2 months in a row as the market was actually making new highs, 2 months in a row where momentum was declining. We have the same thing happen here in December and January, but February has rebounded. February actually is making a comeback. So now this is a monthly chart, so we don't really know until the end of the month. January did this too. January was light blue for a while as well, but by the end of the month, it was dark blue. So right now it looks good, looks positive, but we'll have to see how it ends up. And these are monthly charts down here as well for S&P, NASDAQ 100, the Dow, Russell 2000, Bitcoin, and gold. Gold is looking, this is a monthly chart, but looks really good for the month. All right, so that's where you find that chart for anybody that's interested. I want to show you on the portfolios page, the market timing strategy, because even with the sell-off we had last week after the AI scare and all of those things that happened, the two things that I track, and you can, for those that are subscribers, can read through this to understand how this is put together. But this is a market timing strategy meant for a long-term hold. And it uses the total market index, which is all of these things, the Dow, the NASDAQ 100, the S&P, the Russell, and 3,800 other stocks. So it is literally the total market. And the strategy is based on the weekly. So it is a long-term strategy. And you can see that it gave this long signal back on November 3rd of 23. So that's going on a year and a half now, 18 months. And the current performance is 42%. That's for the 1X. If you used one of the accelerated ETFs down here, the 2X and the 3X, down here it shows you what the gain would have been. So 2X would have been an 85% gain, 3X would have been 128% roughly. And then the short term is a daily for those that don't want to sit through the downtrends that you have to sit through on a long-term basis like this. For those that don't have the stomach to do that, you can follow this one, the daily chart, and go in and out of the market. You won't get the advantage of long-term capital gains like you would with the primary trend. It's in yellow because it's the primary trend. However, you can see it still did pretty well, 38%, the 1X, 38%, even trading in and out. And it's only been long now since January 15th. And it's up 2.7% since then. So right now it would have been over since 11.3. This one also, the accumulation, the cumulative calculation starts from the same time as the primary trend. So the cumulative moving in and out, in other words, would have given you 38.7% instead of 42%. And then you could have stomached the downtrends, but you wouldn't have actually made as much. Anyway, that's how it works. And these right here will show you the two main charts. So the weekly chart, this is the total market index. You can see right there, they're all green. It gave the buy signal back here when the 21 crossed above the 50. That was right after the 2023 rebound. So it's been bullish ever since then, except for right here. It actually did give a bearish signal right here when it went below the 21. And for 1, 2, 3, 4, 5, 6, 7 weeks, it was below that. So that actually was out. That's the 11/3 date is right there. So if you wanted to hold even through that, it would have been even longer, almost 2 years actually. But because of this one actually went to cash. The blue line means cash. It did not go to a bearish downtrend. It went to cash and then went right back to a bullish 7 weeks later. And it's been there ever since, and it still is there, and it looks very positive. The other one, the daily, this one has more signals, obviously. I do not put sell signals on this. Everybody has to make their own decisions on when to sell. But for those that wanted to get in during the middle of that long bullish uptrend, I'm putting potential areas to enter in the middle of that uptrend. So you won't get that 42%, of course, but at least you can get in. So if you got in back here, you'd still be it. And then the idea of that is you just get in the short term, and then you just watch the long term, the primary trend for the exit signal. So that's how that works. Right now, it's actually, I was pretty impressed with it because even with the downtrend after the AI scare and last week the market sold off, it actually held up really well. It did not give a sell signal. It came close. In fact, on the daily right here, you can see it actually went below the 21 day, but it closed right back at it. So because it closed much higher than it opened, even though it's red, it really wasn't a sell signal. And you can see the last 3 days, it's recovered really nicely. So it could continue to go up, but it also could come down. And if it does close significantly below that 21 day, then that would give a sell signal as well. So that's the status of that. All right, that's it. So the next next two questions are related to how to set stops or where to set stops, and also shorting. And to talk about this, I am going to show you the daily scan. I have added some two stocks to the daily scan today. They showed up on the 21 EMA scan. This HIMS down here is a short, and I'll talk about that in a minute. But these are the two that were added to the scan today. You can see where the stops are. They're both positive at the moment. So if we look at Zeta, we actually had it hit the scan back here. We did not get in because it was close to earnings, but you can see earnings were great. It was only like 2 days away from earnings. Earnings were great, and it shot all the way up here. And then it had an article from the Hindenburg, which is no longer in business, by the way. And then it sold off all the way down here. And now it's pulling back, and look at today. So today hit the scan again. The ADX line is positive. It's above both the 21 and the 50, not quite above the 200 yet, but that's where we got in. And the stop is set right down there on that blue line. I'll show you the status of that here in a second. The other one was Eris, also hit the scan. They do recycled water for fracking. So you would think that that probably is going to be a good business coming up here. They also went above, hit the scan because it went above the 21 day right there. Momentum actually went below the zero line a little bit right there, but it looks like it's curling back up. The ADX is positive, and volume looks great for today. So that one hit the scan. You can see the stop is right at the 50-day moving average. So those are the two we're tracking at the moment. And then HIMS, I'll show you HIMS. HIMS is a little different, and I didn't really set the spreadsheet up to do shorts, but I'm going to show you how to do a short. We're going to use HIMS as the example because this is the one that I was asked to use. It looks like a good one, actually, because notice that right there, shooting star candle. It's had a really great run. The momentum is just starting to curve over. It's not really giving sell signals right now, but because it's gone so far above the 50-day moving average, it could easily pull back to the 50-day, which is at 30. So, and because of the shooting star candle, which I covered in candles, if anybody's interested, when I do Technical Tuesdays, I did that last week in Technical Tuesdays. You can find that on a playlist on the channel. So the stop in this case is up here, up here at 45. So you can see now I had to do this in reverse because it's a short. So in this case, the sell price is going to be at 40 and the stop price will be at 45. Now, where is it today? Right now it is HIMS down here. Right now it's at $40.47. So I'm going to show you a couple of things because the other question that was asked is, what about trailing stops? How do you set trailing stops? So this is my E-Trade account. These are the two that I just added today. You can see they're both positive so far. So I got in 27.50 on this one. It's at 27.89. I got in at 20.75 here, and it's at 20.96. So up a little bit already for the day. Of course, I use the risk calculator to figure out the quantities. Now, what I haven't added on here are the stops. So let me put this up there, see if I can do this here. So the stops that I want to add, I'm going to add them to these two. Let me move this up a little bit. Okay, so Eris, I said the stop is at 26. So if I go over here and this little X right here, this is closing this trade. There's lots of little things you can do, but this X says to close the trade. Now it's asking me what I want to do, how to close the trade. So since this is long, I want to put a stop on it, and the stop price that I want it to be, oh, this is Zeta, sorry. Stop price for Zeta was 1850. So I'll make this 1850, and I will make it good till canceled. And that's the whole 330 is already in there. And preview the quote. So there it is. And I'm sending that in. So now you see it puts a little open order right next to that. So now I know that I have an open order for Zeta with a stop at 1850. If it gets down there, it will sell automatically. So now let's do Eris. So on Eris, and on this one, again, I click the X. I change this to stop, but I could also change it to trailing stop. So if I do a trailing stop, I can either have a percentage, I can have an actual dollar amount, I could do a stop limit, which I don't really recommend, but I could do either a percentage or a dollar amount. Or I can just set a number if I want to. So trailing stop will trail the price. It will trail it based on the high. So what that means is if I look at Eris over here, and let's say it went up, actually, let me look at another one. I'm going to look at Lilly, because Lilly reported this morning and they had great numbers. So Lilly took off today. So you can see right there, Lilly took off, it went up, and then it pulled back. So in this particular case, if I look at this a little closer, I could have put a trailing stop on this of, let's say, a percentage. I'm not sure what percentage that is. Looks like the high was 887 and the close was 870. So that's about $17. That's about 2%. So about a 2%, if I put a 5%, let's say I put a 3% trailing stop. So the stop would just move up automatically along with the price. Now, keep in mind that the trailing stop will stop moving up based on the high. So if I say 3%, it's going to be 3% of the high, not 3% of the close. So that means that it could potentially come down, stop you out, and then turn around and move back up. So that's one thing you have to keep in mind if you're using a percentage. You could also use a dollar amount. So you can see right here, it went, what did I say, $17? I don't know what the typical range, you can find that on the options page, but or the ATR. So you could get the ATR for, in fact, I could do that right now. So down here, I think maybe it's in this one. Average true range right there, over 14 days. And it shows it to me right down here. So the average true range is 23.58. Let's call it 24. So I could do a trailing stop of, say, $25. In that case, it would have gone up to a high of 887. 887 minus 25, then my stop would be at 862. So in this case, my stop would not have been stopped out today. It would have been $8 lower than that. So that's one way that you can do it. And I think that's actually a better way than using a percentage, is just look at the ATR, the average true range, set the stop a little bit more than that, or the trailing stop, I should say, a little bit more than that. And then as the price continues to move up, your stop will move up $25 below it all the way until at some point it gets stopped out based on the average true range. So hopefully that was that answered the question. So Lily did really good. By the way, just out of curiosity, I want to look at Amazon. Actually, I'm going to do this a little differently. Let's take a look at the earnings, because Amazon had earnings tonight. And I'm not sure what happened, what they did, but here they are. And let's take a look at that. Okay, so it's down 4%. So it looks like they missed. Not a huge miss, maybe, but down 4%, down to 229. That looks like it's right about where the 21-day moving average is, roughly. 21-day is at 232, so it's a little below that. 50-day is at 224, so it's in between the 21 and 50. It may actually, during the morning, trade down to the 50 and then bounce back. We'll see, but that's not a huge sell-off for Amazon, but it looks like they missed 4%, down 4%. Lilly, of course, did great. They had great earnings. All right, so the last thing is how to short. So here's HIMS. I showed you this before. So right now it's at 40.47. We are going to set up a short. First, let me finish my Eris. And what did I say I wanted to do? I'm not going to do a trailing stop on this. I'm going to do a regular stop. And I want this to be $26. So 26 right there. Preview. And there it is. And when I send, now it shows me that there's an open order next to Eris now as well. So both of those have open orders. That tells me that I've got stop set on both of them. So it makes it very easy. All right, so how do we short? So the stock in question is HIMS. So first let's look it up. There's HIMS right there. $40.47 was the close. It's down to $40.30 in extended hours. I want to sell this. So I do not have any shares of HIMS in my account right now. So when I tell E-Trade to sell it, it knows that since I don't have any shares in my account, that I'm shorting. In order to short, there needs to be shares available to borrow. That's how shorting works. You're basically borrowing shares at the current price, and you're holding those shares, hoping that it's going to go down. And if and when it does go down, then you buy the shares back and you return them into the account that you borrowed them from, somebody else's account. If you own shares of him, somebody might be borrowing your shares to do this, but that's how it works. So I don't own any shares. So when I say sell right here, it brings up a sell screen. I am going to sell 500 shares. I'm not really using the calculator for this. I'm just picking a number in this case. So 500 shares at 40 bucks. 500 times 40, $2,000. No, that's not right. 500 times 40, $20,000. That's more like. So $20,000 in this case. So now I'm saying sell, but I don't want to sell it right when it opens. I want it to go to 40. So would that be a limit order or a stop order if I'm selling? Now, one way you can figure that out, if you don't know automatically, is go to the website, and you don't need a subscription for this. On the home page, right down here are market orders, stop limit orders explained. Say no subscription needed. You can just go here and it explains how to do stop and limit orders right here. So if I want to do a sell, then the sell is below the price, and that's what I want. So remember I said it was $40.30. I want to sell a stop or sell a short at $40. That's below the price. So in this case, it's a stop order. So and this little cheat sheet right here can help you understand how to do that without making a mistake. So I'm doing sell, stop on quote. Stop price is $40. And I'm going to make this good till canceled. So as soon as it hits $40, you can see right now the bid and ask are pretty close. So likely we'll hit it tomorrow. So if I click on preview, must be as good for day orders. Okay. So because the market's closed, I can't do good till canceled. So I'll do a good till day. I'll look at it in the morning to make sure it's still on. So that's where it sits right now. So a little less than $20,000. Now in this case, this $20,000, because I'm selling it, is going to go into my account. So that will be a credit in my account of 20,000. It won't actually result in a loss or a gain until I actually buy it back and return the borrowed shares later on. So I'm going to send this right now. And if I go back to take a look at my orders, actually my positions, you can see those are the current positions. But if I look at orders, I can see HIMS has an open order right now to sell 500 shares at $40, stop to open. So right now the market is at $40.08. If this opens tomorrow at 39, then it's going to sell at 39. So, but let's say it just goes down slowly and it goes to 40 and executes, then I will then have a short on HIMS at $40. Now the question was, how do you do this without risking a lot in your account? So if you think about it, if you're shorting something, if you're buying long, and let's say in this case it's at $40, if you're buying long and it goes to zero, then you're going to lose $40. But if you're shorting and it goes to infinity, let's say it goes to $340, then you're going to lose $300 or $400 or $500. So when you're shorting, the potential loss is unlimited because it could go up forever. So that's the risk of shorting. So how do you protect yourself? Well, you set a stop, just like I'm going to do right here. So tomorrow, as soon as it opens, as soon as it executes, basically, because I can't set a stop in my account until I actually have that order executed. In this particular case, some accounts you can do that even after hours, but in this case, I will have to wait to see if it executes. And as soon as it does, I will then go in and I will set a stop at $45. Now, how do we get out of a short? So I sold to get into it. Remember, I'm borrowing shares, I'm selling them, and I'm hoping to return the borrowed shares when it gets down to $30. So I'm borrowing them at 40, I'm returning them at 30. So how do I set a stop on something like that if I'm already in it? Well, in this case, to get out of a short, I have to buy. So I'm selling to get in. To get out, if it gets down to 30, I have to buy to get out. Well, what if it turns around and doesn't go to 30? It goes up instead. Well, I don't want it to go up very much. So if it goes to 45, then I need to buy them at 45. So again, how do I do that? How do I set that order? Well, if I look back here, so here's 40, if I'm getting in at 40, and if it goes to 45, I want to get out. So that means it's above my price. In that case, it's also a stop. But in this case, it's a buy stop. So that's what I will do tomorrow. And this is a real order. So this may actually execute tomorrow. We're going to see, and I'll let you know tomorrow night. but we'll see what happens. But as soon as it does execute, I will be putting my stop in right away. It could be lower than 45. I could put it in at 42.50. It just depends on what it's doing. If it starts dropping pretty fast, then I'll move my stop down. And the goal now, just like with going long, the goal is to move that stop down to break even. So if this goes down to 35, 32.50, something like that, then I'll move my stop down to break even, and then there is no risk in the trade at all. So that's the way to do it. So we'll keep track of that. I'll take a look at it tomorrow and see what's going on. All right, that's it. Sorry, it might be a little long tonight, but hopefully that was helpful. Let me know if you have any questions, comments. Please like and subscribe on the channel, and go to breakpointtrading.net and get the newsletter. Sign up for the newsletter if you want to. At the bottom of the homepage, there's a $0 for the newsletter that just registers your email and you get notified when it's available. And then for all of the other charts and everything that I've showed you, it's there's a subscription for those. One last thing, which I wanted to do earlier, but because we have jobs coming up tomorrow, let's look at the unemployment claims just to see what they look like. So they ticked up this week. It was up earlier in the month, it went down, and then it came back up. So I think right now the forecast is for 4.1%. Let me just take a look. Let's see. I don't know if they have it on here right now, but we're going to find out. Jobless claims are set to come. Forecast was 214. This is today's. Let's look at this week. Okay, here we go. All right, 4.1. So it's looks like it's expected to stay static at 4.1. I think it probably will, although because these are they're not as high as they were before, but they are still ticking up slightly. So there's a potential this could come in at 4.2. But I think 4.1 probably makes sense for the jobs. So we'll see what happens. That's something that could move the markets in the morning, one way or the other. If it comes in at 4.2, then that could mean that the Fed's going to cut sooner. That actually might be bad news is good news. If it comes in at 4.1, I don't think it's going to have much effect on the market. So everything else, earnings is going to take more priority. Amazon missed, it looks like, tonight. So we'll see what effect that has. All right, that's it for tonight. Thanks for watching. And let me know if you have any questions or anything that you want me to check into or look at. I'd be happy to do that. And I'll talk to you tomorrow. See ya.